If you're an investor who keeps telling yourself, I'll be fine because demand is strong, this video is probably for you. Because demand doesn't protect investors, margin does. In the next few minutes, I'm going to explain why demand-heavy markets like Toronto feel safe until they don't, why margin matters more than vacancy, and why investors are quietly shifting capital toward places like Edmonton in 2026. If you're new here, welcome. And if you've been following along, I appreciate you being here. Most investors watching this aren't looking for excitement. You're looking for decisions you don't have to constantly stress about. That's what this is about. Toronto has demand. Everyone knows that. Units fill, people line up, vacancy stays low. And that's exactly why investors get comfortable. But comfort is dangerous when margins are thin. High prices mean higher debt. Higher debt means less flexibility. And less flexibility means small problems turn into big ones. Demand fills units. It doesn't give you options. Edmonton isn't about hype. It's about math. Lower entry prices create margin. Margin creates a buffer. Buffer gives you time to fix issues, time to adapt, time to stay rational when the market doesn't cooperate. That's the part investors feel in their nervous system, not just their spreadsheets. There's also the operational side. Ontario is slower, more restrictive, less predictable. Alberta is clearer, faster, more decisive. This isn't about being aggressive with tenants, it's about reducing uncertainty. And uncertainty is the silent killer of investor confidence. Here's the trade-off most investors don't articulate. Toronto offers demand with thin margins. Edmonton offers margin with real demand. One makes you feel safe on the surface. The other actually gives you control. And control is what lets investors stay invested long term. No one knows the future. Rates will move. Markets will change. Plans will get tested. So the question isn't where demand is highest. It's where mistakes are survivable. That's how I look at markets. That's how I look at deals. And that's why I spend my time helping investors structure decisions they don't regret later. And if this way of thinking resonates with you, if you're trying to make disciplined, long-term decisions instead of chasing headlines, then the next step is simple. There's a link below where you can learn more about how I work with investors one-on-one and whether it makes sense to have a conversation. No pressure. See you next week.